Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about backtesting strategies, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy guys.
Ernie, you mentioned that the back testing is actually not working.
That's right.
If the back testing is done correctly, why can't you trust it in a way to predict it well?
What is correct, Stefan? What is correct?
What is correct? Follow as much as possible reality.
Is the reality of the past the same as the reality of the future?
To some extent. And I get you, but what you're saying is just be a monkey, throw darts at the board, and what will be?
I'm not saying it exactly that way.
Okay.
I'm saying that we use methodologies that work, but it's not back testing. I'm not using methodologies that are back testing. I'm using methodologies that are adjusting to the amount of volatility and taking advantage of certain types of edges that are fleeting but exist, like trading with the trend. We know that trading with the trend works, and it has almost become a trope or a meme with professional traders that say, trade with the trend, it's your friend, because there is actual reasons why trading with the trend works. And that is that given any individual day or a series of days, the market's going to end up either up or down about a 50-50 shot. No matter how far out you go, that's what it is. Yet the market still trends. So how can that be? The difference is the market does trend. Right? And when it trends, the magnitude will move in the direction of the trend. The average magnitude of the move tends to be a little bit bigger. It's a slight edge, but it's an edge. And so that's why we trade with the trend. But if you don't do something that will actually take advantage of that reality, so there's a pattern in what appears to be just pure randomness, right? The patterns that don't exist are things like overbought, oversold, or any of these kind of lagging indicators, because they never take into scope enough data, and they don't know what's going to happen in the future. Now, in the future, I do know some things about what will happen, and this has been proven forever. Now, it could change, very well could change, but it is a kind of a universal determination. And that is that in randomness, there's about a 50% chance that it's going to go up and down or left or right. That's just the way it is. Now, our markets are set up in such a way because of, I don't know, maybe it's the implied bias, maybe it is the fractional monetary system. I don't know, but there is a slight bias to the upside over the long term. It's a small bias. It's a small edge. It's nothing that you're going to make big money on, but it is a small edge. And so that's why we trade with the trend. But it is not by far our only edge that we're trying to exploit. There are other things that happen. And one of those things is that the distribution of returns, if they were perfectly random, then we wouldn't have a bell curve, right? We would have just this sort of random amount that the small moves would be as big as the medium moves would be on average as big as the long moves, but they're not. So there is a pattern to that as well. We just don't know when it's going to happen. And we know that there's a slight bias. So by taking an asymmetric position, well, that's another thing from asymmetry. We know that a right skewed asymmetric position or distribution or series of numbers versus a perfectly random left skewed distribution of numbers has positive expectancy, as opposed to the left skewed has a negative expectancy. It's a small difference, but it's still a difference, and it's an edge. So we stack up all of these small, what are just pure mathematical edges on top of each other. And then from an options point of view, we grab other edges that are still mostly random, but we're not taking everything into consideration, the whole system and what's the behavior of the system. When you're looking at bots, they don't do that. They take in very small slices or subsections of the system and then only test a very defined area and don't give you any kind of information about how the system behaves or how it's likely to behave in the future. The things that we're dealing with are things that are universal across whether it goes for 10 years or 100 years. And that's what we're trying to exploit.
Thanks for watching guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks guys.